you want to take over the forex market, then I've got just the strategy for you. Right, so over here I've got 2 moving averages on my main chart, and I've got the RSI over here, and I'm just going to be adding just one more addition so that this makes the best strategy ever. Right, so I'm going to show you the settings of this settings of this strategy later. Right, so I'm just want to install these moving averages so that it becomes so that I show you when I've already done. Oh, I forgot to change this over here. Right, so I'm going to show you the settings of this strategy as soon as what? As soon as I'm done. Right, so over here, right, so let me just remove this over here. Right, so the moving averages, I've got 2 moving averages on my chart, so this is what we're going to be using to cue the market, by the way. Right, so the moving averages, I've got the moving average of period 50, right? Method exponential applied to close, then it's the black one on my chart. Then for the purple one is what is the 200 moving average exponential applied to close again. And then for the indicator window over here, I've got the RSI, right? And you can see I've got the RSI and the moving average. Let me just make this moving average a little bit thicker. Right, so let me just show you the moving averages. The RSI settings first, right? So RSI, put the level period 21, right? Take note, we are not using 14 in this example, right? If you are used to using 14, then you can still use it. It might still work the same way, but it's bound to be different from mine, right? It's going, maybe you'll be experimenting with the levels to see which levels you are going to be using, right? Then take note of these levels over here. You can also install this on your phone. I use it on my phone all the time. I'm just using my laptop because it's easier for me to record. Right, so over the year, the levels, I got the level 40, and the level it's still buying, and the level 50, we label it equilibrium, and the level 60, it's still selling, right? And then you click what? Click done. Those are the setting for the RSI, and then for the moving average over here is we're going to set the moving average of period 7. Method is exponential, but I like to use it simple. Let's use simple, right? And then apply it to previous indicator data or first indicator data. Previous or first indicator data just work the same way in this example, right? So, and then you click what? Okay, right? So over here, that's what we want to use, right? So how are we going to be using this strategy, right? So first of all, for any good strategy, you have to wait for what? You have to wait for the market to show its trend, right? So you have to trade with the trend, right? That's what makes the best trading strategy that you can use to cue all those brokers with. So over here, how can we determine our trend, right? So we can do the conventional way of what? Of looking at what structural point, right? So over here, when the structural point gets broken over here, right? This was the major structural point, by the way. These ones are just minor. I like to look at the major structural points. That when it gets broken, it means that we are now in an uptrend, right? We have changed the trend, folks. We have changed the route, right? So over here, what are we going to be looking for when there's that breaking market structure, right? And you can also use the moving averages to determine the trend, but though they're a little bit slower most of the times, right? But when you can use the cross, right? So if they cross in the 50 moving averages on top of the purple, right, of top of the what of the 200, it means that we are buying also, right? But you can also just use the 200 moving average, saying that if the candlesticks are above the 200 moving average, then the market is buying. If the candlesticks are below the 200 moving average, then the market is selling, right? So I just like to use either the crossover. They just want the same thing. Either they're using the crossover because they just happen simultaneously. When the 50 moving average is above, obviously the candlesticks will be above. So it's just one and the same thing, right? And also, what we're going to be using for our trend is the RSI. So as you can see in this example, right, we are using about 3 methods to determine that, to guarantee that we're only trading with the trend, right? So trading with the trend is the only thing that you can do to become profitable, guys. I don't want to lie to you. Trading with the trend is one of those secrets, that your gurus aren't telling you. They just want you to keep on entering those W's and M's, but those W's and M's don't work, right? Most of the times you lose a lot of money if you just want to trade W's and M's, getting the snipest entries and continuing with that, right? So if you just wait for the market to create its trend, don't you have to enter the W? There are many pullbacks in the market, so which means there are many chances for you to enter, right? If you avoid trading M's and W's, then you go a long way, right? Especially if we are trading derivative, right? I don't encourage you to trade M's and W's, right? Just trade with the trend, with the current market trend, right? So how we're going to be using the RSI to determine our trend, right? You can also watch the video where I talked about the RSI, so that it becomes a lot much simpler for you to trade, right? So over here, right, well, when you are buying, right, when you are buying, we're only going to be entering at the level of 50 and the level at 40, right? So whenever I'm buying, right, whenever I'm in an uptrend, right, and the market pulls back to the level 50, I can get an entry. Level 40, I can get an entry. But if it crosses below the level 40, I know that the market is what is might just change its direction, right? So if the market is breaking past level 60, right, what most other guys like to call here is the oversold. And guess what? If it's the oversold levels over here, it's around 70 level over here, and you just sell a little bit and then you continue going up. So then how is it oversold? Those oversold levels just so that market is trending, by the way, right? So if the market breaks past my level 40, right, I know that maybe the trend wants to change and go forward and go down. But if the level 40 keeps on being respected, I know that I'm still holding that trade, right? So if I'm selling, right, I know that market will usually come back and bounce at the level 60, right, and continue going down, bounce at the level 60 and continue going down. That is if I'm selling, right? But if it breaks past that and start maybe to consolidate or range above it, then I know that likely the market is going to what to change direction or consolidate for a little while, right? So over here, what we're going to be doing is we're just going to be entering with the trend, right? So wait over here, right? So we are going to be, for our entry levels, we're going to be using the moving averages and the RSI. And I'm going to show you, remind me to give you a trick, right? I will share it later in the video, right? How you can determine or how you enter the 50 moving average and how you enter in the 200 moving average, because there are two different things. The way you enter over here is not likely the same way that you enter over here, right? I will show you later in the video, but let me just finish off showing you how you enter, right? So over here, when the market pulls back to the 50 moving average, we have our order block or zone flip over here, right? And we wait until the market crosses over here. There's a crossover over here. So I think maybe the moving average might not be visible to you, but that's how I like to see it. So maybe let me just change it to 2 pixels so that it becomes a little bit clearer to you. Right, so over here, we enter when the RSI crosses this moving average over here, right? So it's so like a slower entry, but if you are able to use candlestick confirmations, then even better for you. If you know how to read your candlesticks, even better, then you enter right at that moment, right? So how this is the best strategy is that if you enter over here, right, you can hold that trade for a lot longer, and because you know that the market is in an uptrend, you know that you're guaranteed that the market is trending, right? So if you are not scared, right, that is if you're not scared. But if you are scared, you just have to you just exit and wait for the next trade. Yeah, you can just do that and you'll be good to go, right? All these methods just work, right? So over here, you enter over here, some over here, when there's a crossover over there, right? And you hold, maybe exit when the RSI crosses over again, or maybe there's a resistance, but when the RSI crosses over again, you can exit. But most of the times it can just pretend as if it wants to cross and then continue going up again, right? So but it's just a safety precaution. It's just a safety precaution. You can exit when the market does that, right? So over here, it comes back again, you enter again, right? Might have exited and you enter over here again. So the best thing is that, as you can see, maybe you entered somewhere over here and you exit over here, right? So you can just say you have just a break even. So this strategy here makes the stop loss a little bit smaller, right? And when you are winning big, and you are losing small, right? So that's the key in trading. That's one of the best things that you can do with trading, either risk management, or make sure that whenever you are losing the minimum amount of money as possible, and when you are winning the maximum amount of money possible. So that's why you have to trade with the trend, so that you get the maximum, you get the best out of the market, you get the stake of the market, right? So you don't stick to those bonds like a dog. Right, so over here again, we've got an entry over here when the market pulls back, right? Over here again, market pulls back. And so with this strategy, you have to be very patient and practice it on demo first, because you have to get used to these types of setups where the market is when the RSI is consolidating over here. So if you keep on exiting, as you can see, you just exit at break even or at low or 0 or you are just slightly, maybe you just gained the 50 cents, right? And the market continues going up without you, right? So you have to be very patient to learn this strategy and see how it works, right? So practice it on demo first before you go live. Right? So over here, go back to our 50, we've got an entry over there, right? So that's how you just have to what to trade, right? So the 50 and the 50, right? That's how you trade, right? So the trick that I was talking about at the 50 moving average, or the 200 moving average. So let me just draw a little bit of an example over here. Maybe let's say this is our 50 moving average, right? And the purple is what? Forgive my drawing because yeah, purple is it's a little bit slower, right? Yeah, this is ugly. But just for the sake of what, or for example, it will work, right? So over here, let me use green. I don't know why I want to use green over here. Right? So usually when the market pulls back, right? So you've got a breakout, blah blah blah. When you've got a pullback to the 50 moving average, the market usually just forms one leg, right, and it continues going up. Or in some instances, it can come and form two legs. When it forms two legs, it's also a very good trade, by the way. But usually it just forms what? Just forms one leg. But for us to enter when the market is what? For us to enter at the 200 moving average, we have to see a W, some sort of W, right? It might come over here and not reach the moving average, and then maybe it goes up a little bit, and then it comes back to test that moving average. So this is a W. There are many variations of a W, but want to see a W, a head and shoulder, whatever it is that we're going to see, but want to see something like a W around that moving average. Maybe it can come back and form a perfect W, or it can come back, break past it a little bit, and then do this. There are many variations of W's. I'm not talking about W's in this video, right? These are the only W's that I like to enter. I don't like to enter those W's that are at the peak where I'm trying to get to oppose the trend. I don't like to enter those, right? Maybe you are seeing this aim over here and you want to enter for your sale. Guys, you lose a lot of money with trying to do this. You just have to flow with the trend, right? Go with the trend, right? So over here, we see something like that W over here, right? So market pulls back to the 200 moving average over here. Yeah, you might have entered and made some wins, but I don't like to enter using just one leg. So this is what I'm going to be using, right? So we've got a W over here, right? We've got one leg and two legs, right? And then there's another third leg right over here, right? So when the market pulls back to the 200 moving average just once, right? Just remember that most of the times it will pull back again for to create a W or an M, right? That's most of the times. And sometimes it can just have one leg and just continue. But most of the times you might even maybe if it had reached over here, you might even get your entry, but just know that at the back of your mind, just make sure that when you start seeing signs of reversal, know that maybe the market wants to come back to form that W, right? So if you are entering at the 200 moving average, usually the market forms a W, right? So over here, it pulls back many times. When it pulls back to the 200 moving average, you can see it's pulled back about one, two, three, almost four times, right? Over here, we've got a perfect W, and it continues going up. And when it pulls back to the 50 moving average, as you can see, it just gives us one leg, and it continues going up, right? 50 moving average, we've got one leg. Over here, we've got so like an M over here, but it just later broke that structure, right? So that's this strategy is just that simple, right? Over here, the W is so like first broke out, right? Then it came back for, as I said, there are many variations of what, many variations of W's, right? And when you pull back to the 50 moving average, it's usually just one leg, right? It's rare for us for it to give us what, two legs, like it's doing when it comes to the 200 moving average over here, two legs over there, right? So that's how you use the RSI. And if you want to learn more about order blocks or support and resistance zone flips, watch these videos next.